Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Massar and Jess Menton. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and those folks streaming on YouTube. Massar, happy second day of spring here and a broad-based rally with the S&P up 1% and the Russell 2000 up almost 2%.
All right, I'll give you this the spring day. I did some research, too. I get it. Having said that, it looks like volume is down a little bit if you compare with it what we've seen over the past 5 days. So maybe despite we're seeing the risk trade on, maybe not as much enthusiasm. But nonetheless, it's an interesting trade ahead of that Fed meeting tomorrow, Jess.
It definitely is, Carol. And Carol and I were just speaking with Gina Bolvin, who's president of Bolvin Wealth Management Group. And she was talking to us about how she's basically positioning heading into this Fed meeting, but also, not surprisingly, when you're looking at some of these big tech names, she's thinking those still have a lot of opportunity, especially on the back of what we saw last week with the NASDAQ 100 posting its best week since November. So still you're seeing a lot of wealth management firms want to snap up shares of these bigger tech companies with obviously strong balance sheets and that cash exposure there, Romaine.
Yeah, absolutely. Here, Katie.
Well, I was just going to say, it makes sense if you think about we could be heading into a credit crunch. I know that's the backbone of some of the bearish calls out there. You would think those mega cap tech names, maybe they're the haven.
I thought it was interesting. We talk about that note out by Marko Kolanovic and this idea of sort of the Minsky moment and that maybe this does become sort of a credit restricted cycle. Maybe that is the threat, similar tone that we saw in that Bank of America fund manager survey, that a lot of folks are now more concerned about that than they are inflation. The closing bell's here in New York, and it's pretty much green across the screen with the Dow Jones Industrial Average up for a second day by more than 300 points, or about 1%. The S&P 500 higher by more than 50 points, or 1.3%, and it looks like it is going to close right at that 4,000 level, a psychological milestone to be sure. The NASDAQ Composite up by almost 200 points, or 1.5%, Carol, and the Russell 2000 higher by about 1.9%.
Yeah, most names in the S&P 500, 394 higher in today's session, more than 100 lower, and you got a VIX that's backing off. We're looking at it below 22, Katie, down about 2.7 in today's session.
And if you look at some of the industry groups, even though light volume, you are looking at a big, broad rally here. Up at the top, the big outperformer is the autos. That comes as Tesla rallies a casual 8% or so. Also, the banks having a great day, as are energy stocks up over 3% or so. You have to go all the way down to the bottom to find some red. And in the red, the biggest underperformer on the day is utilities, down more than 2%, Carol.
Yeah, really interesting to see all that green today. All right, let's get to it. First Republic, folks, this was top in the S&P 500. This name up almost 30% in today's session. A lot going on. We had a few other banks, too, I should point out. U.S. Bancorp, KeyCorp, a lot of these names obviously rallying today and top among the major equity averages. We did see First Republic. That fell to a record low yesterday. Investors are wondering kind of what's next for this struggling institution. There was an offer of help, or reports of an offer of help, from J.P. Morgan Chase. You had Treasury Secretary Yellen saying, the U.S. is getting ready, or at least prepared to give more support if needed. You had Reuters also saying that it was looking into, or had a report out that's saying that First Republic looking into how it can sell parts of the business. There's a lot going on. So nonetheless, though, a big pop in this name. Tesla, top of the NASDAQ 100 today. Number 2, a lot of EV companies in the space rallying in today's session. Tesla's bonds getting an upgrade from Moody's, expects the car maker will maintain its position as one of the leading manufacturers of luxury electric vehicles, battery electric vehicles. Also reports out that Tesla is expected to report one of its best quarters in China. So a lot going on. Enphase I want to mention because it was number 1 in the NASDAQ 100 today. That name is up almost 8% in today's session, a 2-day rally up around 12% in the past 2 days. Yesterday it got an upgrade from Raymond James. So a lot going on in that alt energy space today, Jess.
And I'll just add to On Holding, of course, closing up 26% on the day, and Coinbase now on a 7-day run, up 12% just on this day alone.
I'm going to take the decliners, but y'all, I have some good news. For the first time in probably a little bit over a week, I don't have bank stocks on this list, so I'm going to start up. I know, exactly. So I'm taking a look at what's happening with Altimmune. So its shares dropping more than 50%. Basically, its worst percentage decline since February of 2017. And what happened was its obesity trial, it did raise side effect concerns. So you're really seeing that stock getting hammered today. But also, not surprisingly, when you're looking at more of the broader S&P 500, we were talking about obviously these sectors that weren't gaining as much and were lower today. If you're thinking about last week when investors were searching for income, obviously that did happen in the utility space, but the opposite was happening today. So if you're looking at Atmos Energy, those are some of the shares when you're looking at utilities that were selling off. And so basically that stock down about 4%. And then also if you're looking at when it comes to the REIT space and those specialty REITs, Digital Realty Trust, that was down close to 4%, on pace for its best, or its worst day rather, since early February, Romaine.
Yeah, all 48 stocks in the KBW Regional Bank Index closing out in the green here. Also saw a lot of activity once again in the yield space as the Fed begins that two-day meeting. A 19 basis point jump on your two-year yield. Right now, we're right around 4.2%, still well below that 5% level that we were at just a little while ago. But it shows you that now those rate expectations starting to perk back up. Your 10-year yield higher by about 10 basis points, and out on the long end, 5 basis points higher, Katie, on the 30-year.
And once again, all of the action is concentrated in the front end of the curve. The fact that you have two-year yields selling off more so than 10-year yields, that is a bear flattener, I believe. You look at the 2s-10 spread, it's at negative 58 basis points. A year ago, that would have shocked us.
And we should point out that flight away from some of those havens. I mean, we saw a dollar weakness here on the day. We saw gold dropping the most in about 2 weeks. And so a lot of the flight to safety that we had seen last week seems, at least for the last couple of days, to have been unwound.
And we were just talking about yesterday, right, when it comes to the Fed's discount window, basically that lending hit a record high when we're looking at the data last week. Those outstanding emergency loans standing over $300 billion. If you compare that to what had happened in the global financial crisis, that was around $438 billion. But this was in such a shorter time frame when you think about it. So that's something that has really stuck out to me when it comes to statistics heading into this big Fed meeting tomorrow.
And you know, that's just one of many things that the Fed is going to get asked about tomorrow. Its balance sheet, I have to imagine that's going to be top of the list. It's sort of been happening in the background, what had been the shrinking of the balance sheet, but we know it jumped up by quite a bit last week, Carol.
Yeah, absolutely. All right, let's just get to GameStop, just crossing as we speak. Fourth quarter net sales, a slight beat, $2.23 billion. The estimate of the street was $2.18 billion. Fourth quarter adjusted EPS, 16 cents a share. The street was looking for a loss of 15 cents a share. So no surprise to see this stock taken off in a big way in the aftermarket, up 15% here. Fourth quarter proceeds from sale of digital assets, $4.5 million. I'm not quite sure what to make of this, Romaine.
Yeah, I'm not sure what to make of it. I am looking through the release, and inventory actually did drop pretty significantly. They had about $683 million in inventory. That compares with about $915 million in the previous fourth quarter here. So that could be adding to this here. Also, this is interesting too. Cash equivalents, $1.4 billion at the close of the quarter, which is a little bit of a surprise to me. I haven't followed this that closely, but that's a lot of money.
And you can see the surprise in the shares after hour, up 15% or so, really fluctuating here. I mean, this is a stock. It's been somewhat resilient, only down 4 or 5% so far this year, down 25% over the past year. But compared to some of the other meme era stocks, this is one that has fundamentals and has held up pretty well.
And another big name we are also going to get after the bell, taking a look at Nike in a little bit. That's going to be really key focus. Also, we heard from Foot Locker earlier this week. They did reiterate how they're going to have this more revitalization plan when it comes to Nike. So it's going to be key as far as how Nike's footprint continues to expand. It also has had that issues in China. So something else we're going to be watching closely after the bell. Yeah,
great read on the consumer, a great global read, if you will. Just going back to GameStop, the percentage of float, we're talking about short interest, down about, it's about 22%. It has been trending down, but just something to keep in mind as we watch this trade in the aftermarket.
Absolutely. I mean, we're certainly going to see a little bit of a squeeze here if these results do stand up. And, of course, waiting to see the conference call. Of course, remember the last conference call they had was, let's just say, short and not very sweet here. Not a whole lot of extra details. But this is really about a longer-term story here. And one quarter does not necessarily write, I think, what a lot of people want to see fixed.
Exactly. I mean, this is a company that's trying to transition into an Amazon-like business, really moving a lot of its sales online, away from those iconic GameStop stores that you see in malls. So, I mean, it's an important perspective that this is not a 1 or 2 or 4 quarter story.
And one interesting perspective, this was a growth story. That's what people wanted to see. But what you see in this press release is a lot of talk about cost cutting, a lot of cost about shoring up the balance sheet here. And maybe that's part of the reason why you're seeing such a good reaction.
Yeah, I was thinking the same thing. Short and sweet, right? There's not a lot in there, but it's what we've heard from other companies about cost-cutting initiatives, and certainly representative of what we've heard from a lot of companies in this environment. All right, guys, next stop is the Fed meeting. That will certainly be our focus tomorrow, but that's a wrap on this Tuesday. Our cross-platform coverage, radio, TV, Bloomberg Originals, and of course on YouTube. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.